Hello guys, welcome to the Train Parrot. I have some time sensitive information that I really want to share with you, and I also have some good news as well that you should definitely be aware today or in the next few hours at least. The first one is that we have some inflows of cash, not necessarily yet into crypto, but this is good news not just for crypto but even for any sort of assets. What we're looking in here is this double bottom on the Federal Reserve balance sheet. The double bottom that we were saying, eventually from here this could develop into an uptrend. So what I want to tell you, the good news is that now we have a confirmed fully developed uptrend on the Federal Reserve. You see double bottom, breakout, higher highs, higher lows, and most recently today, the first time I see this on 10th of March, is this new candle with a decent higher high relative to the previous one finally, and that is extremely positive flows of cash that together with the higher high on the M2 create the equation that we can state now that we are in the right track for liquidity coming into the system. You can see on crypto it hasn't landed yet, it's been decreasing, and even the last reading shows that everybody's pulling out from crypto. So eventually if this trend is sustained, it's going to start leaking into risk on asset. At the moment, with all the uncertainties and geopolitical tensions and the trade war and all of that, that's not a friend of this. But once that noise goes away, and as long as it goes away eventually, we got a really great argument to state that we should be seeing some inflows of cash into crypto. Second good thing that is going on, if you missed my video with Paul Barron earlier, I mentioned that already, but I want to make sure that everybody knows we have a recovery signal yesterday on the hash ribbons, and this means that we are one step away from getting a buy signal on this on-chain data. This is tracking that the hash rate has recovered now. What we are waiting now is for price to put a bullish cross on this. So definitely worth keeping an eye on this. We are one step away from getting the final green there. Might take a few days, a couple of weeks. It depends on the price action now. It's just about the price action. It's no longer about the hash rate that was dropping. The time sensitive information that I want to share with you today is the 4-hour. What we are seeing here is something that I've been waiting. First of all, we have a bullish structure, higher highs and higher lows on the 4-hour. Now we have a breakout of this resistance that we've been respecting since the 10th of March, 9th of March still. And at the moment we broke out and we are coming from the top to retest the breakout. So as long as we hold this line of the 84K, we could, argue that we could defend this positioning here and carry on to the top. We're going to look into some order book data to see if that's likely how things are looking, or if it's smelling burnt and maybe it's going to damp. If it damps, if it has a pullback in here on the context of the 4-hour, right? I'm not talking about a dump on the weekly or something like that. So it should be smaller scale. We have 3 fair value gaps that at the moment are at risk. At risk of what? If we cannot hold the breakout of the 84K, 1, 2, and 3 are at risk. Can we get to the third? I think so. There is a chance that we go still to the third. If we focus now on the 4-hour time frame RSI, you can see that we've been doing these waves in this channel. And I will say that we are, if not at the top, very close to the top of this wave, right? This wave in here should most likely create a retest over the weekend that goes into support. Are we going to hold it? I don't know, but at least I think there is a good chance to go to 45 and test it, because in here we also did it. We did it around Thursday during the week. Then we could come back in here with some uncertainties, some politician opening the mouth on Sunday, and that's all we need to come back in here to retest it and hopefully hold it. Where is 45 in the price? That should be the next question. 45 in the RSI, it's located in the middle of the third fair value gap at 81.6. That's how important it is. Let me remove this. So I want to leave in here a mark. Let's say we meet with this on Saturday, or maybe we meet with this on Sunday. That is assuming that we don't hold that breakout. The breakout might hold, and maybe in how many minutes until we close this? We got 3 hours. So we need in 3 hours to look at this candle. Is it still above 84? Okay, good news. Higher chances that we're gonna go for liquidity 2 and 3 at 87 and at 90. If we don't hold it over the weekend, we might come down. Remember that we are about to close as well on CME if we haven't done it already, which leaves a very high price potentially to form a new CME gap at these highs at 84. One step at the time. If we don't hold 84, we can go up to here very easy, because that is just go back down and test support. We already did it on Thursday. Why wouldn't we do it over the weekend in the middle of a pullback? So be prepared for that. Let's go to the daily. On the daily, we have a mixed bag. We have the 84 resistance. On the daily is 84.2 because that was the level that we held in this area around here, and now we are coming to visit it as a resistance. It is mixed bag because it's not nice to meet with that resistance and close the daily right there, kind of confirming that we couldn't go beyond that. It is good at the same time because 84.2 is above 83.7, which is the current reading of the 200 daily MA. So many people are looking at the 200 MA. I check articles everywhere today, and pretty much 1 out of 2 articles were talking about the battle to reclaim the 200, and 4 days in a row not being able to do it. So closing today at 84.200, well, that's 500 above the 200 MA. So many people are gonna get hype about that, and they're not necessarily gonna notice that there is here an 84.2 that we couldn't cross. We are in the middle, so it always feels like this, being in the middle of a range inside the falling wedge, where you think, well, we might as well come back and put a new low in here, or maybe we rally into the top. And at 88, at this top right there, I'm gonna show you some dudes that they really want to short that level in just a second. Before we get there, I wanted to mention a watch out. Okay, extremely sensitive and important information. I feel like CME, the market is already closed, and let me see if I get some information. Well, I don't know if I can find here if CME is still open. Let me know in the comments if you think at 9 p.m. UK time CME is already closed. But you can see that on Binance, the gap is huge, right? The gap goes all the way to 86.5. That's what I told you in previous videos. But you can see that I shrank the gap just to 85,500. Why am I doing that? I already told you on Telegram, Instagram, and Twitter. Make sure you're following me because that went before this video. That's time-sensitive information. That's because the CME premium is more expensive than on Binance, and the gap on Binance is larger than on CME, and on CME is almost already gone. There's only $200 left to fill it. If CME is already closed, even if the price crosses those 200, it won't get filled. Why? Because to fill a gap on CME market needs to be open. The point of filling a gap is allowing them to fill orders, and those orders cannot get filled if the market is closed. And if it's closed by the time I'm recording this video, then we leave the gap or those orders for later. Now, if the closing price of CME, let's see the 15-minute chart. Is it moving? It doesn't seem to be moving the price, so maybe it's already closed. The closing price in that case is 84,440, and on Binance 84.1, and that is beautiful, guys. In a way, it's really great to see that we are closing this high at 84. We are basically closing on the 4-hour CME at a price where we have already broken out and right there at the confirmation level. So if we were to come back over the weekend to 81, then we get a chance to try again. You could come down to 81.6, and by Monday we need to close the gap and go back to 84, and that's the next chance to trap more shorts and to create more liquidity to the upside to continue up. Let's see the rest of the data. I hope that made sense, or at least it's gonna leave you thinking over the weekend. Let's see what's missing that I wanted to share. Well, we came to this liquidity in red. That is the reason why we are rallying straight into that, and now we're stopping. So those liquidations are pushing the price back down to 83.6. That's a typical reaction to those liquidations, as I mentioned in the morning. The leftover of liquidity on the upside is now at 87.7, 85, goodbye. Level 84.5 that I mentioned, target 1 gone, target 2 gone, target 3, 87.7 still on the table, and the 90.5 also still on the table. 2 more targets. The higher we go, the more risky is to wait for those. On the top end, as you can see here, we have the biggest liquidations. Those are 85.5 of the past 3 months, of the past 30 days. And on the lower end, we have quite flat area in here with nothing really looking that big, except for this 78.8 that I think I mentioned in the morning when I say if we are really going to get a rejection at 84, my initial candidate to go to is that 78.8, and I have the feeling that that was the case when I was sharing. Liquidation levels now are affecting more the longs, so we should expect that if we lose that 84 on the 4-hour, those 3 fair value gaps are gonna help to flatten once again this 225k that is putting at higher risk the longs. That means that it's 200k more heavy, the liquidations immediately definitely below the price. That's enough for a pullback. And I also wanted to show you this level in here at 88. Remember, I was mentioning on the top side of the falling wedge, 88, the people wanted to short it. Sometimes they're just manipulating most of the time. And we also have some support here. They are apparently defending the 83.2 at the moment. And the price is, very close to that. So we could say that we are having some support. In this area, we have almost 1,000, slightly below the price, defending the rally. Then in here, we are seeing 800 defending, losing now the breakout area, right? So the breakout area is 84 and they are defending it at 83.2. So in case the price comes below, there is that liquidity. Whether it's gonna stay there or if it's gonna be pulled out, that is impossible to tell. You can tell that it's actually becoming brighter, so maybe it's gonna stay, impossible to tell. But now this is looking a little bit like a topping pattern with an M. It could be seen as well like a flag, but I'm starting to see it a little bit more like an M pattern. And if that's the case, that can target around this area if it breaks down. All right, guys, if you appreciate this shorter than usual update, hit the like, write down below a comment, subscribe to the channel, and I'll see you tomorrow. And by the way, don't forget that I'm running a trading competition on Bluffing. Have you seen it? $5,000 prize pool. The link is at the top of the description, and we have around 11 days left for people still to participate on this. Bluffing is a non-KYC exchange, so it's pretty easy to deposit and withdraw from any wallet. So I'll see you there. Take care. Bye bye.